Hello, everyone. Welcome to Solutions, Not Just Problems. We are your hosts, Vanessa K. and Be Real. Be Real, how you doing today?
I'm doing very good.
Are you back in Atlanta now? Did you
No,
come
I'm
back?
still in Rhode Island for a little bit. I actually am attending a networking event tonight. Yeah, I still got some work I'm doing here, so I got to clean some stuff up, and I'll probably be back next shortly. Let's put it that way. I don't want to put a date on it because, like I said, I got some stuff I got to take care of. But I do want to announce that last week I told you we're going to be in the championship
Yes.
for
So
Mount
tell me
Pleasant,
about that now.
Kilties Nation, Mount Pleasant, all day. And we
Look at
were
you with the shirt on and everything.
listen, had to represent. Came back and won the chip. Or
They
for those of you that don't
did.
know, that's short for championship. And won 47-45 in a barn burner. Came down to the last possession, and we were able to pull it out. Yeah, we started out at 2-4, ended the season 7-2, and we ended up beating the first place team. We were the third place team. Ended up beating the first place team and won the championship. So
Outstanding. They
yeah.
must have been like on a high the
Oh
other
man.
night, huh?
Oh man. I'd like to give a shout out to all the Mount Pleasant players and plus our opponent and Coach Holiday, Coach Charles Holiday, for all his support throughout the summer. And looking forward to the upcoming season. Hope everybody in Rhode Island comes out and supports the Mount Pleasant Kilties season in 2025-26. Looking forward to having a really good season this year.
So what do they have? Do they have a summer league and a winter league, or how does that
Oh,
work?
yeah, well, the summer league is just something where they have an opportunity to just go out and kind of play basketball. It's kind of like a pickup league. You still got referees and the time clock and stuff, but it's not like a full-blown season. But it gives them an opportunity to kind of prepare for the new year, kind of take a look at some of the players that may have played like JV or didn't get a lot of run on varsity. So most of the players that we had on the team were JV players from last year. We had four varsity players and seven JV players. So we're just getting our first look as to what the team is going to look like next year. But the actual season starts in December and it
Okay.
goes through March, depending on how well you do, with the playoffs and everything.
So this is giving them a good momentum for that.
Oh yeah, oh yeah, oh yeah. They
Huh?
loved it. They loved it. We have I got an article on kilties-nation.com, kind of going through what took place throughout the championship and in the playoffs. So if anybody wants to check out that article, it's right on the front page as soon as you come there. It's on the blog.
On the blog, on what website? Your web on the
Kilties,
um, oh, Kilties. Okay,
kilties-nation.com. Yes, that's the
gotcha.
website built for Mount Pleasant. Yep.
All right. Well, good deal. Well, congratulations, and
Thank
hats
you.
off to
Thank you.
the
Appreciate
team.
that. All right.
Yes, outstanding. I've been rooting for them all year. We've been keeping track of them since last last year. So
We appreciate your support from North Carolina. I wish when you were here, I don't think we had started the season yet when you came up because that was like that
right, I'm
first
gonna have
week.
to come up and actually
Yeah,
attend the game
yeah,
now.
yeah, 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 yeah. We didn't start. Well, if you happen to come up during the winter, what I mean, this year of next year, if we got because there's going to be some events happening that we can invite you to, just like we did last year. And then also we're going to do another recording or another interview. I'm sorry, on the radio at 93.7 Juice.
Oh, we are.
Oh, oh yes, yes, yes. That's gonna
All right.
that we'll be back. We'll be
Okay. Well, keep me posted. That was fun. I enjoyed it.
loved it.
I'll
Loved
always
it.
look forward to that. All right. Well, we're going to set the stage for today's show. When building a well-rounded investment portfolio, two of the most common asset classes people consider are stocks and real estate. Both can play important roles in diversification, but they offer different benefits, risk, and levels of involvement. So today we're going to be talking about diversifying your portfolio. But before we dive into this show, we're going to take a quick break. We'll be right back. Welcome back, everyone. So let's start off with terms and definitions like we usually do. So we're speaking about stocks and diversification. So let's get that out of the way and bring everybody onto the same page, right? What are stocks? Stocks represent partial ownership in a company. It's when you buy a share. You're essentially buying a tiny slice of the business in its future earnings. I don't know if you all know the show The Prophet or Marcus Lemonis in The Prophet.
Mm,
Have you seen that?
one of my favorites. I wish it would come back.
Yeah, and essentially that's what he's doing, right? He goes in and he takes over the business and he puts it, gets it back on track. But in order for him to do that, he's purchasing a slice of their own ownership in that business. He's
Mhm.
buying the stocks, and allows him to do that.
He's also purchasing equity in
Hmm.
the company as well. So equity is just, in other words, for part of the ownership. So that now, as the business grows, if he were to pull out, and they sold it, let's say they put 10 million into it, sold it for 20 million, he'd also have some money, on the equity side as well.
Exactly. So, B, what are some of the advantages of owning stock?
You talked about it just a second ago, which is obviously
Hmm.
diversification when it comes to your portfolio. And diversification is just having a bunch of different types of investment vehicles, stocks, bonds, real estate, and what have you. Um, but the main advantage, in my opinion, is that it's for people that want to take on risk, okay, and really want to grow their portfolio quickly. But it's also something that you do steadily over a period of time. So it's not something that you get in and you get out. In 2 years, I'm going to be all, no, you want the stock to grow. So let's say you got into a Bitcoin stock, if they had stock, okay?
Hmm.
Or let's say you got into a Walmart, or one of my favorites, and I remember back in the day, was Trojans, between that and cigars, Philly blunts back in the day. If I would have invested in those two stocks, I'd be rich right now, you know. And one of the things about stocks that's really important that I found is you got to get in early. Okay.
Hmm.
So when you hear that something, has the opportunity to grow, like a Tesla, you know, or a Bitcoin or one of these things that are really taking off, you want to start out and put the money in. Think about it like this. When I first heard about Bitcoin, it was 10 years ago. Okay. I'm like, I ain't putting no money in no Bitcoin. Eh, what's that mess?
And
Man,
that's the mistake some of us do make, right? We can't see the vision, right? So we're like, what is that about? Yeah, nah, and we pass up on it.
let me tell you about investing, okay? And we're going to go into back into the stocks in a minute, but I just want to say something about investing as a whole is you want to get in, okay, when the prices are low, okay? And you want to get in during downtime, not when there's a boom, okay? So let's say back in the day when 2008, when we had the Obama situation, when Bush left and Obama came in and we had the housing crisis, right?
Hmm.
That was the time to actually start investing. Of course, real estate was the number one. But let me just tell you a quick story. I believe it was Bank of America. A buddy came to me. He said, "Hey, man," he said, "the stock just went to $4. Okay, $4.
Hmm.
I got a little tip. My buddy was telling me, I guess he was dealing with some kind of a broker or what have you. He said, I got a tip. He said, if you get into this, man, he said, by the fall, now this is early in the year, let's say March, April. He said, by the fall, he said, it's going to go through the roof. It went from $4 to $40. Okay.
Mm.
Yes.
Hmm.
Between March and September. Had I put money in, let's say $1,000, okay, that $1,000 would have grown to 40,000
Oh yeah.
within that shorter period of time. So the key to investing, in my opinion, is to get in early, if at all possible, if you're trying to make that quick hit. But if you're trying to get to the point where you're trying to do it over the long haul, then you want to diversify your portfolio. Once again, I am not a broker. I'm just telling you based on what I've learned and what I know from my experience.
And diversification simply means just not putting your eggs all in one basket.
Yes.
You're spreading it over different things, right? Another advantage of owning stock is liquidity, right? You can cash out on it quickly. However, remember the golden rule, we were trying to build wealth over time, but you can cash out on stock. If you need quick money, you can cash out real quick. Stock also gives us the benefit of entering at a low cost. We can enter the market as low as $100, a share. We were talking about that last
Mhm.
week. We can enter very low.
Mhm. And things like Robinhood, I believe Fidelity, Charles Schwab. We talked about it last week, but
Mhm.
sometimes things kind of overlap a little bit. So those are some brokerage houses that you can actually get in contact with and invest for as little as $100 just to get started. You know. The other thing too is, oh, I want to ask you, are there still penny stocks? I know you've been doing your research. They still have those? Remember back in the day they had penny stocks?
Oh, I don't know. I haven't heard of
Okay.
penny stocks in a long time.
Yeah, yeah, that was like a maybe an 80s, 90s thing, but I just thought
Yeah.
about it as we were talking about that. And I'm like, okay, during your research, did you find that, there was still such thing as a penny stock?
No, I didn't come across
Literally, you can invest
that.
for pennies on the dollar.
Yeah.
You
No,
know,
I didn't see
yeah.
that. So yeah, I'll look it up though.
A
That
lot
is
of
a
it
good
was like those,
question.
some of the tech sites back in the 90s,
Mm-hmm.
like the what was it? PayPal, um, the one that Zuckerberg was in early on.
Hmm.
What's his name? Used to own the Dallas Mavericks. Mark Cuban. They had these tech stocks that you could buy for pennies on the dollar, but a lot of them turned out to be really lucrative. So
Mm.
you come across a stock or you come across a company that you think might take off, an app or whatever. Invest your money in it. I was just listening to my man Ray J, and he was bragging about how he was able to have the earbuds. Remember the
Oh
Raycon?
yeah, yeah,
Yeah.
yeah.
Yeah. Well, he said that he was able to make something like about $40 million.
Mm.
Yeah. He said so the money he made would be equivalent to you going like 10 times platinum
Wow.
with an album. Okay. He says, so for all you people out here, he was saying, all you people out here that hate and blah, 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 what you don't realize is that investment right there pretty much made me rich.
Mm.
You know? So he wasn't necessarily investing in stock, but he invested in a company, you know.
Good
So
deal.
yeah.
Yeah. If you're educated and you have the time to research and and that's the key with stocks, you got to do your research. You got to know the market. Um, Historically, stocks are known to grow substantially,
Mhm.
even outpacing inflation. So, you want to take advantage of using stocks long term.
One of the things I do want to tell people though, Vanessa, is that you can't get into this over 3 to 5 years, and think that you're going to get rich. Okay.
Right.
A lot of us, when we go into business, we think we're going to double and triple our money. If we go into an investment, we're going to, quadruple our money. It happens, but it happens exponentially over time.
Yes.
Okay. So it's not something where you wake up tomorrow, you put in 1,000 and, a year from now you've got $3,000.
Right.
You might,
The time.
you, yeah, you might have made $100, so it might go from 1,100. Then you reinvest that, and now it goes to 1,800 the following year, then 3,000 the year after that. So it does take a while, but by the time you reach retirement age, and let's say you're someone in your 20s and 30s right now, and you retire at 60, okay, you could build a pretty nice nest egg between your
Hmm.
401k, perhaps your 403b, your uh, IRA, both the traditional and the Roth IRA, and also like what we're talking about here is stocks and bonds that you can also invest in to
Yeah.
kind of build your portfolio.
We're going to take a quick break. Don't go anywhere. We'll be right back.
At BSM, we transform ideas into results. With high performance websites, strategic digital marketing, and intelligent business solutions, we help brands stand out and scale with confidence. Ready to elevate your brand? Let's make it happen. Visit brandstrategymarketing.com today.
Welcome back, everyone. Okay, so another area to invest in is real estate. We've talked about the stocks now. Real estate is another option. So, what does real estate investing look like? Real estate investing involves purchasing physical property, residential, commercial, or land with the goal of generating income or capital appreciation. And just like with stock investments, real estate investments also have advantages. They're treated a little differently, but they do have real estate has its advantages. One, you're purchasing a tangible asset. You own something physical that can be used, rented, or improved. Another advantage to owning real estate is income potential. Rental properties can provide consistent monthly cash flow over
Vanessa, let me just
time.
I wanted to add something real quick. And this goes back to the last segment we just had.
Mm-hmm.
And that is those of you that may have like a 401k or 403b, oftentimes it is invested into a real estate holding company. Okay. And I hope I got this correctly. But it's a company that goes in and purchases up properties in different neighborhoods. It's happening in Atlanta, it's happening in New York. So you've got these major companies that go in and invest. Well, some of the funds that you may have with a 403b or 401k may be investing in those companies that invest in real estate. Okay. So if the market tanks, the real estate market has a downturn, what ends up happening is you could lose money. I remember back in 2008, I looked at my portfolio and I lost about 25%. So let's say I had $100,000 invested almost overnight and went down to 75,000. Okay. So what you can do to avoid that, or to, if you anticipate that happening, or you see there's a huge downturn, you can contact whoever's managing your funds and shift the money. Now you can shift it into maybe stocks, or, a mutual fund that doesn't have as much real estate involved in that fund. So this is something that you probably want to take a look at if you find that you've kind of lost some money, kind of you can shift things around. So instead of investing 20 or 30% in that particular segment or that particular market, let's say like real estate, you could shift it, like I said, and put it into maybe, stocks or bonds or something that's a little bit more safer. Okay. So I
Right.
just wanted to bring that point up so we
Good
can go
point.
back to it. Okay. Thank you.
That was a good point. Real estate can also, you can use, I'm sorry, you can leverage opportunities. You can use financing to control a larger asset with less upfront capital in real estate.
So can I ask you a quick question?
Absolutely.
If I wanted to be a real estate investor, what could I expect to put down as, and I know this is something we're going to talk about next week, but just quickly, what could I expect to have to put down to get started? Is it still, I believe, 20%? Is that what's needed uh,
To get into real estate, no,
as an
no,
investor?
it depends on what you're doing. So yeah, there's different avenues, different strategies, where you're at, what type of investor. There's all different types of investors.
Okay.
I can be an investor, right, as a real estate agent. So
Hmm.
it depends on the type of, what you're investing. Like there's different commercials, very different from residential.
Hmm.
And then like you said, going in a real estate portfolio with a company, there's all different ways to do it. That is a topic all in itself. I should say, and we're hitting that next week with
Yeah, yeah, but
investment as a career, and how you enter that. But yeah, it's different ways to do investment.
I was trying to have like a little segue so we could kind of give them a little piece now. And then next week say, hey, check us out if you want to learn more about this particular topic. So I
Right.
was just hoping we could get a little bit of a little tidbit. Maybe
Well,
it's
like if you're
10%, is it 20%? What is the
the lending is different from it would be from going to a mortgage lender. So there's hard money lenders. So the percentages are different. Some people don't use cash. Some people, it's just, yeah, I'd have to really write that out for you.
okay, no, that's cool. That's
It's
cool.
different
I
ways to
mean,
go in it and
we
enter in it. Yeah.
listen, we put each other on the spot all day here.
You're right.
But I wasn't
And
trying
there's
to test.
strategies. You don't have to use money. Like people entering into the real estate investment world without using their money, right? They're using that's investment rule 101. Never use your own capital. So there's different ways to do it. But I will definitely, when we talk about it, and the reason why I'm trying to push it off till next week, because it is a little complex. So if you break it
Okay.
off, I'll break it down so it's understandable.
Okay, cool.
But with that, we're going to take a short break, and we'll be right back. Welcome back, everyone. So just like with stock investments, real estate investments also has its advantages. One is it's a tangible asset. You own something physical that can be used, rented, or improved. What are your thoughts on tangible assets?
Well, as a homeowner, it's something that it's been a great investment for me, being able to build up equity. If I wanted to, I could rent the property. And by building up equity, that means that I could tap into that equity.
Hmm.
I can go ahead and take a loan out against it, if need be. I could use it to pay off debts. I could use it to actually purchase other property, like we talked about a minute ago.
Hmm.
I can use it to invest in a business. Um, so there's a whole lot of advantages to being a homeowner, especially once you've been a homeowner for quite some time. I purchased my home back in 2003. So I've been a homeowner now for 22 years. So
Hmm.
you build up a considerable amount of equity in that period of time. No, I understand that right now, home ownership is not attainable for everybody, you know. But you were talking last week about the restructuring and what's the word you used?
Oh, we're in a corrective market.
Now, does that mean that properties are a little bit more attainable for people, a little bit
No.
more affordable?
It means that it means that the inflation has risen higher than the consumer's wages. So the typical buyers cannot afford to buy. They're losing their buying power, right? The prices of houses are up higher than what they're making.
Hmm.
Um, so yeah, we're in a corrective market, and it looks like we're looking like we did in 2006. And then historically speaking, if you go back and look at the periods in time when we were in a corrective market, it's probably about 10 years. We're going to go 5 years downhill before 4.5, 5 years downhill, 4.5, 5 years back up before it corrects itself.
I guess
So
I guess my question is, does that mean that the property, let's say, 6 months ago it was worth 200,000, that means now it's worth 180,000?
right, they're going down.
So it would be a little bit more affordable for people who are maybe looking into becoming a buyer at this point in time.
Right. It would be
Okay.
more affordable. Yeah, over time, yeah, as it goes down, yes, it would be a little bit more affordable they'll get some purchasing power now. They get their purchasing power back.
So is this what you would consider to be a buyer's market or
Nope, it's still a great time it's the best time now for if you're a seller. You're selling
okay,
at the most money you can get, right? So it's a perfect time to sell your house now.
gotcha.
Even a buyer now, because you're collecting equity, right through this corrective market. So when it's over, 10 years from now, you have 10 years equity built up in your house. I
Hmm.
wouldn't even say it's a bad market. If you can buy, buy. Yeah, I would go ahead and buy because you're
Great.
going to be that much ahead of the game 10 years from now. So I try to tell people, don't look at your transaction as I'm just buying this house or selling this house today. Look at it as a whole. What do you look at your end, the other end too? Are you purchasing another house on the other end? So look at that whole transaction or those two steps as one transaction, and look at your whole return on investment.
Okay, remember back in 2006, almost going into 2008, we had the bubble, you know. Are we expecting to have something similar go on?
That bubble has already passed.
It's already
So we're
passed.
on the decline now. Yeah, that
Gotcha.
we're into that corrective market now. I'm seeing it all the time, price reductions. I mean, the prices are coming down. So when you're investing, you have to think of what am I trying to do? What am I ultimately trying? Am I trying to build up quick cash where I need, money right now? That would be about using the fix and flip strategy. You can get cash flow coming in, almost immediately. But when you're doing the exercise and a buy and hold, that's long-term cash over time. That will be buying rentals, buying properties and renting them out.
I remember back in the day, you used to have about 20% down. Is that still
Mhm.
the case, or is that changed considerably? Because you talked a minute ago about us having different ways that you can go about financing rental property. Is it still that you need to have, regardless of how you obtain the financing, do you still have to have a certain percentage that you have to put down?
Oh yeah, you still have. I'm not sure on the percentage because not even the 20% is mandated now. You can client, and the normal consumer can uh, negotiate that. It's not 20%, but I guess the hard money lenders, they would have their, it depends on who you go to, who
Mm,
you're talking to and who you're borrowing it from. They're a little higher though. Their interest rates are a lot higher than a natural mortgage would
yeah,
be.
they tend to be in that 15 to 20% bracket, right?
They do, and they have different products too. So, there's bridge loans. I can get a loan for, a couple of months. That wouldn't be something that would be offered to the normal homeowner, but they have their own different products and ways of doing things, from that financial standpoint.
I can tell you this from personal experience. Be careful if you're dealing with these hard money lenders. If you're dealing with, non-traditional lending institutions,
Right.
you need to know what you're getting yourself into. I remember back in the day when they used to have the no doc loans and
Oh
that type
yeah.
of thing. Yeah. And a
Yeah.
lot of people were, making 30 grand a year and purchasing $200,000,
Right.
and they started out with almost a very small interest rate, but then it ballooned after a year or
Hmm.
two. So now that $1,200 mortgage is now $3,000, and it wasn't affordable to them.
Exactly.
You have
It
to
was
be really
almost like they were
careful.
set up to fail,
Yeah,
right?
well, it was,
Hmm.
and they were called adjustable rate mortgages, but I used to call them beat mortgages
Hmm.
because they were
They
they
beat
were
the heck out of your paycheck.
because in order for you to be able to refinance and get the a decent interest rate, you had to come up with some cash
Yeah.
to get out of that loan. So
And
I
what
never
about the people who couldn't refinance? They didn't qualify to begin with, so never mind going back and refinancing,
a lot of them lost their homes.
Yeah,
Yeah,
yeah. Yeah, but with hard money lenders, you do have to be careful because there's a lot out there. Social media is saturated with them. You don't know who is real and who's not. So, really do your homework, when you're choosing them and make sure they're vetted. The FDIC would be make sure they are FDIC attached, like a bank.
absolutely.
Okay, another area where real estate investing has its advantages is it's the inflation hedge, right? Property values and rents often rise with inflation. That's what we're going through now. If you're on the investment side, well, that may be good, but on the consumer side, with the rents going up, it may not be so good. But that's what happens in the market. The rents go up just like the inflation does.
Yeah, and one of the things you want to do is you want to find someone who's has expertise in this area. You
Hmm.
know, we're going and explaining this at a very high level, you know, and just trying to provide you with information that's out there that you may not be aware of. But once you get into, the process and you start really getting involved, you really want to speak to someone who has expertise in that area.
Absolutely. Well, we're going to take a short break and we'll be right back. Dreaming of a new beginning? Finding the perfect place or getting your home sold at the right price can feel overwhelming. Call Vanessa Kay, your local real estate expert. Understanding that buying or selling a home is a big decision, she'll guide you through every step from finding the home suited for you or advising on how to price your home to negotiating the best deal. And it all starts with a free consultation. Why not schedule yours today? Welcome back, everyone. We're going to talk about some things to consider when it comes to stock and with real estate. Okay. And we're going to go through these kind of quickly. Stock, one of the things you want to consider is volatility. When you're dealing with stock prices can swing up and swing down dramatically in short periods. The other big thing to know about stock, it's dependent on market cycles. Stocks are sensitive to economic conditions, corporate performance, and investor sentiments. So when we're going through this, right, we want to manage our emotions because that it can be very emotional. We want to be careful not to pull out too fast or make emotional decisions that can mess us up. We want to keep our eyes on our why and on our goals. Market drops can tempt investors to sell at the wrong time. So you want to be aware and know the volatility that goes with stocks, and how it changes quickly, and then kind of work on, those emotions. Do you have anything to add to that, Be Real?
If you, I would advise people to get into it as early as possible. You know, if you're already 60 years old and you're trying to now get into investing in some of these long-term investments, it's probably going to take you, at least another 10 years before you see a significant return. But if you're someone in your 20s and 30s, now is the time to be a risk taker, you know? And so if you see the Tesla stock or the Bank of America stock, like I talked about earlier, or Trojan stock, or something that you think can be lucrative long term, go ahead and invest $1,000, into it, or $100 a month with some of these Schwab's and Fidelities and what's the other one, Robinhood.
Robin Hood,
Yeah,
yeah.
yeah. Go ahead and invest because I think the younger you are, the more risk you can take, and the
Yeah,
older
we
you
talked
are,
about the and
yeah,
your contribution doesn't have to be as big, right? Because you
exactly.
got a long term ahead of you.
Yes, but as you get older, you have to probably be a little bit more conservative. But like you said, you may have to invest a little bit more, to get to where you want to go. So,
Catch up contribution,
yeah.
yeah. Well, here's some things to consider with real estate. It has lower liquidity, right? Selling real estate takes time and it often involves significant transaction costs. So you're going to need more money to enter the real estate investing world. Management demands. Rental properties require time, effort, and potentially dealing with tenants and repairs. So if you're thinking about getting into the property management side of it, unless you hire a property manager, you're actually taking on the task of a landlord. Market risk. Property values can decline due to economic downturns, neighborhood changes, or oversupply. So we want to be careful when you're strategizing and making decisions about where to put your money and how to invest. You want to also make sure you have a grip on the market around you. Again, hence the reason why an expert will do well. Anything you want to add to that, B?
No, I mean, we pretty much, I think, covered just about everything for that particular area.
And I
Uh,
know I want to say this. We sound, I know I sound, and I'm in real estate, but I sound a little unsure because there are so many levels of investing. And in each level, it is. There's a lot to understand in the different areas of investing. Like I said, you can be anywhere from a wholesaler, a real estate agent, a fix and flipper, a buy and hold, a commercial investor. So all of these are disciplines in the investment world.
Yeah, the only thing I would add to that is you want to find an expert, someone who has experience in that area who's been doing it for a while. Because
Right.
it sounds to me like just because you hire a real estate agent or a broker doesn't mean that they're versed in every
Mm.
single area, you know? So getting
Mentorship.
somebody, huh?
Mentorship is important in this area, in this industry. You got to find the right mentor. If you're thinking about being a fix and flipper, get with a fix and flipper, who's in the industry that knows the intricates ins and outs. If you're trying to be if you want to buy and hold transactions, you want to mentor with someone who's versed in that. Because, and there's the other side, the flip side too. One little mistake can land you in jail. There was a guy that he is on social media, and he went to jail playing with that 1031 exchange. Didn't know the laws, and lost everything, his business, family, and went to jail. He served about 7 years. When he came back out, he built everything back up. But yeah, he had to go through that, and now his ministry is teaching on those 1031s and the knowing the laws and all of that when you get into investment to save other people from going to jail. So with that, we are going to close it on out right now for a quick break, and then we're going to come back and wind down with finding the right balance, some tips. Welcome back, everyone. When trying to determine the right balance, here are a few things to consider. Risk tolerance. Stocks generally have more short-term volatility, while real estate has more liquidity risk. The investment horizon, right? Long-term investors can weather more stock volatility. Real estate often suits those comfortable with a multi-year commitment. And then there's the active versus passive preferences. Stock can be managed more passively, while real estate often requires more hands-on involvement, unless you're investing in real estate trust. Well, this wraps up today's show for our and it wraps up our financial literacy series. We want to thank all of our family, friends, and fans who have followed along with us during this series. This is Vanessa K and Be Real signing off. Remember to keep growing, stay motivated, and thanks for tuning in.
Peace.